So you want to have a ton of money coming in on a monthly or quarterly basis so you can have that extra spending cash. I'm going to give you 5 facts about dividend investing to help better your life and better your portfolio in a short amount of time. So let's get into it. Dividend investing can easily become passive income, and I have made it my personal life goal to make my passive income cover all my big expenses like my house, my food, my car, and any big trips or things like that I want to spend my money on. Now we're about to get super technical and data heavy, so bear with me. I promise it's going to be good, and make sure to smash that like button. So let's begin. At number 1, believe it or not, dividends have accounted for a huge percent of the growth in the entire stock market. Check this out, I'm about to blow your mind. In a study called Why It Didn't Matter by Funko, Dr. Ian Mortimer and Matthew Page went looking for the long run of the S&P historical return since 1940, and we can conclude that reinvested dividends have accounted for over 90% of the index's growth during that time. Just think about that for a second, okay? 90% of the growth since 1940. So let's assume that you're able to invest $100 at the end of 1940. This $100 would be worth $174,000 at the end of 2011, assuming you had reinvested those dividends, versus only $12,000 had you not invested those dividends. What a crazy big difference this makes, and is exactly why I personally reinvest every single dollar that I get back into my dividend portfolio to make back into itself. I like to think of every little dollar as my little dollar working for me, recruiting all his little dollar friends to make my wallet huge and chunky. Now you might be saying that this is a very fair critique, and I also don't like it when people use super data and heavy mathematical models to support their conclusion because they use data favorable to providing their point. So let's adjust this objective as much as possible to make it unfavorable data to try and illustrate the exact same point. Moving us on to point number 2, if we look at the low growth areas such as the 1940s and the 1970s, the reinvested dividends have still accounted for over 75% of the stock market returns. And why that's important is because you may not have known this, but dividends companies fall less hard during recessions and recover a lot quicker. These recessions illustrate the exact same point, so let's check this out. At number 1, November 1973 to February 1975, dividends per share, or DPS, fell 1% in comparison to earnings per share that fell 15%. The next recession, from July to October of 1981 to 1982, there was no decline in dividends per share, while earnings per share fell 9%. The next example, or number 3, 1990 to 1991, dividends per share fell 16% and earnings per share fell 32%. Sample number 4, June 2001 to December 2001, DPS fell 6% and EPS fell 54%. The last example, which is the most recent recession, the housing bubble of 07 and 08, DPS fell 24% in comparison to EPS falling 92%. So why is that such a big deal, and why are dividend companies so special, and what makes them protected during economic recessions? And honestly, I don't get it. But it's true that some companies can actually cut their dividends entirely, or rarely, they may dramatically cut their dividends, but that is hard for them to do because of the company's future earning powers, and it's supposed to set their reasonable stock and be sustainable no matter what the market conditions are. Another factor that helps us is dividend investors love to use those dividend paychecks to buy more high-quality dividends paying companies for less. In other words, stocks that are depreciating in value. By doing this, we are multiplying our income much faster. This is very much in contrast to how growth investors invest their money. Let's say they invest in a Tesla, and this is not true for every Tesla investor, but many of them. They chase short to mid-term profits, and they will wait for favorable conditions when the company will report favorable quarterly reports to say it's made money. And if it doesn't, the share price will drop in value, and many of these investors will get skittish and scared and will put them out by doing this. They're doing this till they do this and just lose money, and you can see how dividend investors have a lot more earning power because we're much more motivated by this constant flow of cash income that we receive on a monthly or quarterly basis. So if you think about it, it makes perfect sense why dividend investors and companies have done much better during economic recession. It also comes to reason number 3, that profits are a matter of opinion and dividends are a matter of fact. Now, some companies have been known to make it seem like they're a lot more profitable than they actually are, and there's a lot of different creative ways that a company can do this. But that's a video for another time. That's a video for another time. Now, share prices in the stock market are not always super accurate and reflective of the truth, and that means if a company is not paying dividends, it's a growth company that makes it a little more difficult to assess how profitable that company really is. People have to trust the CEO and the company about reporting its own profitability in hopes that they are not lying to the public. And of course, this shows how point number 3 has happened before. And if a dividend company is not profitable, they cannot pay its dividend, and it's just simple as that. A dividend investor knows that each and every dividend it received is 100% real and coming from real profitability, and it's a real dollar. It cannot be manipulated by creative accounting to make it seem like a company is more profitable than it is. And this simple facts give me all the confidence I need to keep investing more money. Moving us into point number 4, at the basis at which you bought at, it means if you put out 100% into a company paying you 4%, they are going to pay you back $4 regardless of the share price's worth, whether it's half or double, assuming the company doesn't freeze or cut its dividend altogether. And that alone helps me sleep at night. And no, just because a company is going to pay you 4% or $4 a year does not mean it's going to take you 25 years to get back your investment. That's not how it works, because the principal value of the shares, assuming that the company is healthy and growing, will also appreciate, and your dividend should appreciate and earn money, and which is a pretty incredible thing if you think about it. For reason number 5, dividends are in an inflation hedge while looking at the S&P dividend growth rate over a 10-year rolling. Since the 1940s, we get a 6% dividend growth rate. So if your dividend growth rate is earning faster than inflation, protecting your dollar from losing purchasing power and winning back some of the earnings. This, not to mention, about your dividend stocks, people misunderstood that when a company pays said dividends, the share price will drop the same amount that it pays you. So the dividends, for example, buy the stock before, get the dividend and sell the stock at the same day, thinking you outsmarted everyone. So Blaine, what's the point of investing if the share price will just fall the same amount? Doesn't it just cancel out? I'm saying it like a brat because some people think they're clever, but in theory, yes, that is how it works. In reality, it is not the case. Sometimes the share price will drop by less than the dividends, sometimes by more, and sometimes the price will go up despite the company having to pay its dividends. That all depends on a few factors, including how the shareholders perceive their value to have affected and impacted. But that is a story for another time. And kids, that's how I met your mother. I don't know about tax advantage investments. I know you can receive beside the Roth IRA, which is less of an investment and more of an account that holds all your investments and will pay you when you're ready to retire tax-free. I also might set up a Roth IRA when I'm of age. Comment down below and let me know your favorite way to passively invest for that sweet cash. And of course, I know it's taboo to talk about money on the internet, but I want to know how much money you guys make passively. So make sure to do that. And because it's the internet, I'm sure people are going to say billions and billions and billions and billions. Sending you guys the best of love. Don't forget to smash that like button and subscribe. I'll see you lovely people on Friday.